Thanks for having me on. Yeah. Look, I think what stands out here and why you see the stock rallying in the after hours is the fact that the sales numbers really troughed at the very end of March at down 35%, a pretty staggering number, but have since improved over the past 3 weeks. They're in April down in the high teens, and we believe that there's an improving trend essentially every week. So I think that's what's driving this, is that you're seeing that the trends really start to improve week over week. And we're not only seeing this at Chipotle, but we're seeing this really across many of the restaurants we cover.
They also gave an update on cash position and their balance sheet. How does it look relative to some of these other restaurants, which are also seeing, virtually no traffic with restaurants shut down across the country?
No, it's a good question. I mean, they've got over $900 million of cash on the balance sheet, and if you recall, Chipotle went through a similar situation like this back in 2016, where they had, many quarters. I think there was 5 consecutive quarters where they had pretty negative same-store sales, and yet they were able to manage and drive positive free cash flow. So I think they're in an even better financial situation today, and I think they know how to manage through this. So I suspect that Chipotle won't be burning through cash, as we're hearing from some of the other restaurant operators who are essentially talking about how much cash they're burning every week because their sales are down, 40, 50, or 60%. Chipotle is not in that bucket.
Peter, where are we with new store openings? And do you want them to plow ahead with what they planned there, or to scale that back dramatically?
My guess is for the time being, they'll probably pull back, maybe a little bit. But as we get a little bit more clarity around, the same-store sales growth rate going forward, I think they should just come back to the unit development pipeline that they have, because the returns are still exceptionally well, north of 50% cash-on-cash returns. So I feel like if they're not going to burn through cash and they're going to drive positive free cash flow, there's really no reason for them to pause or stop their development.
The question, Mike Santoli, I guess, is whether it's all been factored in. I mean, Chipotle is never really a cheap stock if you look price to earnings, and it has had a very strong bounce off the March lows.
Very strong. It's not really all that far off the highs. It's maintained as very much a premium valuation. I do think it reflects what's going on in a bunch of different sectors, which is the bigger branded companies with the balance sheets, the ability to weather things, are getting the benefit of that in their share prices. I do think the question is, down the road, are there going to be any hiccups as people go back to work? Is there going to be some kind of a front loading of demand? What's going to happen to food costs as we worry about a little bit of sourcing across the food industry? So those are the kind of side questions, but the overall story has been very much consistent when it comes to investors' embrace at Chipotle for a while.